halfway since last year. We was so busy, we just stopped there.
Right.
So right now, actually, just no plan with still just like a holding company. I have the Bing holding company. Under the Bing holding company has another two company. So actually, this three company hold all the property. Under those the three company, each property has its own LLC. I'm just set one LLC, but that LLC actually not perform anything. So right now I'm still jumpingo, every the money come in just to, the one same account. I know that's definitely not going to make work. So that's why.
Right. So I guess what I'm not understanding. So the one account, is that under one company, and that company's like a management company?
It's right now. I was going to make one company as a manager company to manage all the property, but currently I did the half, then stopped there. So right now still is the holding company. Everything is in a holding company to collect rent or pay it out. Even on the other LLC, the company still work on one company. This is the company we can call the manager company. We can call the holding company because our other company still own a lot of the property also.
Okay, so yes, it's good to have a holding company or a management company to collect the rents and also to pay for repairs. You don't want 50 companies and 50 accounts or anything like that. You want to separate the financial side from the rental side. So having a holding company collect all the rents, and let's say property number 12 needs new carpet, that holding company pays that carpet. So that's good, because then you isolate that one company by itself. Because that company there, nobody's walking in it, nobody's going to trip over a pile of money. It's not having, like the other LLCs with properties. Properties are a very dangerous asset. Trucking companies, trucks are very dangerous. Property's dangerous. People can slip and fall and, all sorts of things. So having the one management company control all the finances is great. The concern I have is you being the only owner on those 50 LLCs in Michigan exposes you to liability. And the reason why Michigan doesn't recognize one owner or one member protection. Okay, you have to have a partnership. So right off the bat, we would really want to set up a completely separate company either in Wyoming or Delaware and make that a partner in all your companies. So now you have two people, the company and you, as a partnership to protect those Michigan LLCs. There's 4 states that recognize single owner protection, and that's Wyoming, Delaware, Nevada, and I believe South Dakota. So you can be the only owner and still have protection. All the other states, you have to have 2 or more. And a company is considered one of the 2. Does that make sense?
Yes, sir. Yes, sir.
So that's something we'd have to do right away. Are you facing any type of lawsuit now, or?
No.
Very lucky to have 50 properties and no lawsuits. I got people that have 2 properties and a dozen lawsuits.
Because I don't let them to sue me. Anytime they ask something, I say, okay, I will do it for you.
Right.
I will do it for you.
That's a good policy to have. That's a real good policy. But yeah, I've got a client right now, he's got 22 properties, and he's had a dozen lawsuits in the last 3 years. So, I mean, it's just how it works, So a couple of things we should consider doing. One would be, at least setting up one or a couple of companies to be partners in the 50 companies. The properties that you have, I know you said they're not big properties, but you look at the totality, all the properties and all the value. It'd be a good idea for us to have a second company and have it hold a mortgage on your property. Now, you're not taking any money out. This is your company. But what we do is we create a friendly lien or a friendly note in your company name. you're not taking any money out, and you record these against those properties. This way, if a renter, let's say you did run into that one bad renter or something, and they wanted to sue, well, renters aren't going to go write a check for $4,000 or $5,000 to retain an attorney. They're going to go to one of those contingency, I call them daytime TV attorneys, and that attorney's going to look up the value and see everything you own and see if it's worth going after, your assets. So what this does is it makes it look like they're not free and clear. It makes it look like there's mortgages on it, and that forces them to go after the insurance company instead of going after you. Does that make sense?
Yes.
So that's a real neat. That's what we do with real estate investors. It's a real neat way to kind of stop lawsuits before they come. You've done a great job. You've got a great foundation doing the companies and all that you've done. There's just a couple of things I think we need to maybe tighten up a little bit or make a little stronger.
Mm-hmm.
Did you have any questions at this point?
Makes sense.
Yeah. So what I'm thinking, if we set the company in like Wyoming, but they cannot find, with the Michigan, I'm on this property. But once in case has the lawsuit, they ask for the federal tax ID.
Right.
If we with the federal tax, they would find it. You have those property, right?
Well, so the Wyoming company is only to be a partner in your Michigan companies. So you have protection. So in the eyes of the law, they look at a company as a true and separate individual. That's why companies can file bankruptcy, they can apply for credit, they can have to do tax returns, like corporations have to do tax returns, by themselves. So they look at it as what they call a real and separate entity. So even if they found out that you own that other company, it doesn't matter because that other company is a separate entity. Now they can argue what they call alter ego, meaning that you as one partner in the Wyoming are the same. They can argue that, but in the eyes of the law, a company is a separate individual. Like I'm a separate individual from you. If you and me were a partner in a company, you would be one person and I would be one person. Same thing with companies.
Okay. So we still need to do like we have the separate the manager company. And with this 50 property, we just separate the company. So corporate with the Miami, like set the new company was there. That's what we need to do, right?
Right. So we would need to set up another company. If it's very simple, we just set up two companies. So one company to be a partner in all your businesses. Okay.
Okay.
And then one company to hold notes on all the properties. So what you're doing is you're protecting the LLC, okay, by making a partnership, but then you still have the equity in the properties. So the second company holds the notes on those properties, and they call it a wraparound mortgage, they call it a equity stripping, they call it a friendly note. There's several ways to call it. But basically what you're doing is you're not taking money out, you're just putting a promissory note on that property. Think of a home equity line of credit.
Yeah.
You go down to Bank of America, you say, I have a home, I want to borrow, I want $100,000 line of credit, but I'm not going to take any of the money. Bank of America is going to put that note on your house as if you did borrow the money, but you haven't touched it. And it's the same thing we're doing here.
Oh, okay. 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 Do you have any question?
And one other thing I want to say, because a lot of people think, well, if I put all these lines of credit on my house, is my credit, your personal credit, So you're not, since you own the company that holds the note, you're not going to call Experian and TransUnion and Equifax and report that you have these credit on the property. So it has no bearing on your personal credit. Does it change it? Does it show up on it? You would physically have to contact the credit reporting agencies to tell them that you've done this. So nobody self-reports because why? It would be a hindrance.
Okay. Yeah, that sounds good. So where are you located?
So I'm in Washington State, and it's called Vancouver, Washington. I'm just north of Portland, Oregon. So, yeah, but I've lived all over the country. I was born and raised in California. My company moved me to Nevada a couple of times to work there. I've worked in Florida. I've lived in Utah. Like I said, I've been with the company nearly 18 years. I'm the longest, other than the CEO, I'm the longest tenured person in the company.
So if we continue to the next one, so I hire you to help me to to make a structure of the property. So what's your fee?
So well, there's a couple ways to go. So with $2 million in cash, are you interested in doing something offshore for better protection because you're $2 million in cash, or you want to stay domestic?
他说那个你要不要去那个现在那个巴哈马还是什么开银行的账？
不用。
不用。
Yeah, so that 2 million, first now just hold as is, because I still want, if there are some opportunity come over, I still want to do some investment.
Right. Well, I mean, if you moved offshore, you could always wire the money back. But I always some people are adamant about having an offshore trust and company because of the protections that offer better protections than U.S. Some people are adamant about having U.S.-based protection. So I always like to gauge and see where you're most comfortable with. We do both. We do offshore. We do domestic. So it's just a matter of making what your comfort level is.
有个问他那个中国钱那个船里面能不能进来？就是那个巴哈马那个。
中国的钱。Oh, my son asked one question. If we make the short offshore the company, if the money from I still have some money in China, can we transfer the money to that?
You can, yeah. You can move that money from China to here. To offshore.
Okay.
In that case, how do you access those funds then in the future?
So it's all wire transfer. So you wire the money from China to, let's say, Caymans. Let's say, from the Caymans account, you can wire it there. From the Caymans, you just wire it right into here. Mike will have to talk about tax consequences and all of that. He's the CPA, who's the genius with that, but it's just a matter of wire transferring.
But in terms of tax consequences and reporting, how does that work?
So the structures we do offshore or domestic are tax neutral, so it's not going to increase or decrease taxes. So U.S. people that reside in the U.S., work in the U.S., have to report all worldwide income. So since the trust and the LLC offshore are pass-through or flow-through entities, they'll flow up to you personally, and you would just report. So let's say you collected $1 million in rent, and you moved it offshore and left it there, and let's say you had it in an interest-bearing account and you earned 8%, you pay the tax on the million plus the 8%. This is what you would here.
Okay, I understand. 那要是这个样子，
我就暂时先不要。Now, what we think are probably offshore company just leave as it is for now. Maybe in the future, we will do it.
Right. So what I would recommend in this case,
I share some screen. You can see.
Oh, okay. Yeah, I was wondering what just popped up on me.
Here.
So.
Paul,
Yeah. So.
Paul, do you have something to screen to share? So people easy understand.
Yeah, I can take pictures.
Okay.
All right. So you guys can see the diagram.
Yes.
So yeah. So this is, if we can go back one to the first one you popped up, Michael.
Okay. First one.
Yeah.
Okay.
Go to the one that had like the there you go, right there.
Okay.
So this is the offshore setup. So you have your Cook Islands Trust, the beneficiary to the right.
Sorry. Okay. Too much. Okay, here. Go back. Here we go.
Yep, right there. So the person to the right is the beneficiary, and then the trustee is a foreign trustee. And we actually have one called a trigger trust, where you're the trustee, and then in the event something were to happen, then we insert the foreign trustee. But in a standard offshore trust, you have this person is the beneficiary of the trust, the foreign person of the trustee. The trust will eventually own the Nevis company, and then the U.S. person will be the manager of the Nevis LLC. So you have the string of control, and then you have like your brokerage account and your offshore account down here. So you're in full control. If there's companies out there that say, oh, we'll do a trust, but the trustee is going to manage everything. The downside to that is every time you want to do something, you have to reach out to a foreign trustee, have them do things, and they have billable hours. Our company, we do things a bit different. We go back to you as the Cook Islands Trust, you're the beneficiary, and then on the left, you have the trustee, and if you look down right below the Cook Islands Trust, where it says owns the Nevis LLC, and then to the right, you are the manager of that LLC. So you're in control. If the lawsuit happens, then the trustee steps in your shoes. So generally what will happen is if somebody said, okay, Bing, a judge says you have to pay this lawsuit. You say, I understand, Your Honor. You write a letter of demand to the trustee. Dear trustee, I've been ordered by this judge of this court for a judgment against me in this amount. I demand you release the asset. Well, the trustee, which is our associate firm in the Cook Islands, duty bound to protect you, is going to refuse the order. If you say no, the judge can hold you in contempt until you change your mind. But since you tried and the trustee refused, they can't get your assets and they can't hold you in contempt. That's why this structure is so strong and works so well for clients. What do you have on the next slide? I noticed you had.
Yes.
Okay, so this is how we're talking about the lien structures. Okay, so you have, this is with Nevada, so change Nevada to Nevis, and then you see how you have the lien on the house, the lien on the car, personal loans. So you have the Nevis company hold the notes on your properties or cars. Okay, so it's the same thing with Wyoming that we're talking about, but this is stronger because it's offshore. Anything on U.S. soil, a judge can overrule. Anything offshore, a judge cannot. Does that make sense?
Yes.
Yeah.
Okay. So this is basically how you structure, let's say instead of Nevada, it said Nevis. So you do like your liens on those properties. If you had cars, I have a guy right now, we're doing liens on his cars. He has a I think it's a 1965 Mercedes Gullwing. It's 1.4 million. So we're doing a lien on his car because that's a very valuable asset. They can do personal loans to you, just the same structure. Here it says family trust. In our case, we do Cook Islands Trust. If you want to do domestic, this could be basically the same thing. We could do Nevada. I think Nevada's given up a lot of privacy. They've gotten wildly expensive. I would do Wyoming or Delaware. Same structure. Lien on the properties. You have a family trust here. Lien on the properties. Lien on vehicles or other equipment or assets. This is the Fortress Triple LP. You can do a Triple LP or an LLC, either one. So these are all good structures. You just need to know if you want to go offshore, you want to stay domestic, whatever your personal thoughts are on that.
I think at this point, your personal thoughts would be to keep it domestic.
Okay. So this structure here, we can do on the, do you have a family trust?
Half. Doing the half.
You have half of one? Okay, so I recommend we do a family trust. It doesn't offer protection, but two things are very important about a family trust. One, estate planning. Okay? If you have a will or you have nothing, it has to go through probate. Probate court has fees, probate attorneys get involved. Anybody in the world can come over and say, wait a second, she said I was going to get this or get that. And I've seen probate tied up for years. You know, when you have a living trust, it's a contract and you delineate what you want done with your estate. Once you pass, it becomes irrevocable and there is no probate. The other great thing about it is let's say we go domestic, we set up this trust, we set up everything like we talked about, and I don't know, 6 days, 6 months, 6 years from now, you find yourself in a lawsuit. We can change status of that trust, meaning we can move it from a domestic U.S. trust to an offshore trust, but the original date stays intact. So they can't say, oh, you set up this big fancy trust because you got into a lawsuit. You can say, no, I set that up back in November 2022. So it gives you a time, like a timepiece or a time clock. So the ticker's running on it. So they can't accuse you of setting up big fancy trust. I would do that. I would do the Wyoming company to be a partner, Wyoming company to hold notes. And I think for now, just to get you started, I think that'd be a good way to go. And then later on, if you find yourself in another situation, we can move it offshore.
Yeah, okay. Yeah, so 2 years ago, I was start on my, the revocable family, the trust. I was live there already, but, not finished. Just still, that's why what I think is halfway.
Right. So an irrevocable trust, they're trickier because you're not supposed to touch anything. But the way around that is you can do an irrevocable trust with a Wyoming company. You control the Wyoming company. It doesn't offer a lot of protection, but it does give you some protection. So that would be an irrevocable trust owned by, controlled by, with a Wyoming company inside it. And then you operate through the Wyoming company. The same thing like the Cook Island Trust with the Nevis LLC, but it's domestic.
Okay.
So so that'd be simple to do. I mean, Michael could get together and get a proposal for you, sent over. Michael has all your information, correct?
Yes, sir.
So, yeah. So we got 50 properties, 50 LLCs, a couple companies. Yeah, we get to protect it real well.
Okay. That's what we covered together, 50, right? Okay. All right. Yeah, sure.
Okay, perfect. Any other questions?
Yes, actually, can you explain the reasoning behind the one-member partnership? Why does it need to be a partnership per se as opposed to just as an LLC?
So, 4 states recognize single member, or member as an owner, single member protection. And that's Wyoming, Delaware, South Dakota, and Nevada. I mean, you yourself can be everything in the company and you have charging order or you have asset protection. All the other states do not offer that. So if you're a single owner of a company, they can get charging orders, which means they can put liens against everything. You don't get charging order protection. Charging order protection is let's say somebody sued you and you have a partnership and they try to put a charging order against it. So let's say I did it, personally, not as a company. So on April 15th of 2023, let's say I put $1 million, $500,000 charging order on a company. I have to pay the tax on it on April 15th, 2023, even if you didn't pay me. So states that offer single member protection offer that charging order protection. States that don't have single member do not. So they can immediately get a lien, they can immediately get demand payment. There's nothing they can do. So that's why you want to have a multi-member, and other than those 4 states, a multi-member company.
Okay, I see.
And some states are a lot worse than others. Be thankful you're not in California. Because that's a bad state to have a lawsuit.
Okay. That's it.
Okay. So that's the what we have right now. For now. Yeah.
All right. So Michael and I will get together. We'll hash it all out, put together the best plan for you, and fees and everything, and get you taken care of.
Paul.
Sure.
By the way, Paul, what information you need from Bing?
Well, I want to talk to you about the tax structure a little bit on it, and we can go from there.
Do you need her tax return?
No. I just need to talk to you about the tax structure of it.
Okay, just the name, social security number.
Nope, I don't need that either.
Just a proposal. Okay.
So we just need to have a little chat.
Okay.
So
okay.
All right. Sounds good.
Bing, do you have any question?
Yeah, I think for now, right now, we should be good.
Okay.
Yeah.
So we are working on to bring some the proposal for you.
Yeah.
Okay.
Yep. Perfect. Any other questions?
No?
All right, then we'll get in touch with you soon.
Sure.
Thank you, Paul.
Okay.
All right. Take care, guys.
Okay.
Yeah.
Bye.
Bye-bye.